He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She'll soon be quoted on the front page. Business Standard. He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She'll soon be quoted on the front page. Business Standard. He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She'll soon be quoted on the front page. Business Standard. He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She'll soon be quoted on the front page. Business Standard. He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She'll soon be quoted on the front page. Business Standard. He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She'll soon be quoted on the front page. Business Standard.
At SAS, we love bold questions, outrageous and impossible questions. The answers are waiting to be discovered because space isn't the new frontier. Data is. And with the right questions and the right analytics, we make data do amazing things. Like make the world safer, faster, healthier, and kinder. All we have to do is ask the data, analyze it, shape it, and make it work smarter for everyone, everywhere. With SAS, you can turn data into answers and ask the questions that move the world forward. SAS, curiosity forever.
Good afternoon, and welcome to the final session of Business Standard Presents De-Risking the Risk Business in association with SAS. We started this journey with you more than 2 weeks ago and tried to decode the anatomy of risk in BFS inside out with India's leading risk managers in banking and insurance. In the 5th session today, we will discuss the digital shift in the insurance sector. Thank you for being with us through the series. If you're watching this on bs-bfsiriskmanagement.com, please type your questions for the panelists in the box given. We will be asking some of them at the end of the discussion. May I now request our consulting editor, Tamal Bandyopadhyay, to start the discussion.
Thank you, Manish, and very warm welcome, very good afternoon, good evening for Sharat, who is joining us from Singapore. Good afternoon to rest of us in India. Warm welcome to the swan song, if I may say so. Last, the 5th in a part of a 5 series event, and second for insurance. Today, it's I would say it's a challenging subject because it's too technical, but I can assure you we have the best of brains from the insurance industry to discuss. So it will be as interesting as ever. Manish, I'm correcting you. Manish said that we will take up some questions depending on what kind of, we can take even all questions if they are really, really interesting. Most of the time, what happened, many of the questions have already been answered through the panel discussion. That's why you don't take any. But do send your questions. I understand close to 1,000 registrations. I don't know exactly how many of you are watching, but I can assure you It will be an interesting discussion for the next 1 hour, 15 minutes or so. The digital shift automation for actuaries. Before I introduce the subject, let me introduce the panel. First one is Prasoon Sarkar, Actuarial Head, ICICI Lombard General Insurance. Welcome, Prasoon. Second is Deepak Nair, CTO. Deepak Nair is CTO of Tata AIG. Deepak had some apprehension that we might have called him by mistake because everybody is actuaries, what is a CTO is doing. Rest assured, Deepak, you have a very important role to play today because we are talking about the role of actuaries or the changing role of actuaries in a digital world, and you are heading technology. So certainly you have many points to make. Then Anurag Rastogi is the President, Chief Actuary, and Chief Underwriting Officer also, all three together. HDFC Argo General Insurance. Thank you, Anurag. Welcome. We have Gaurav Malhotra, who's appointed actuary. Again, appointed actuary actually means that he is the head of actuary, Bajaj Allianz. And last but not the least, Sharad Baliga, Senior Advisor, Actuarial Transformation of SAS. So Sharad, while all other four are the players in the game, we are not talking about politics, khela hobe, khela shesh. It's a different, in different sense. But Sharad is a sort of our knowledge partner. Sharad will bring on the table the global practices, actuarial practices, how it's changing, how India can follow. I wish, and I had said even earlier, apart from gender diversity, we shouldn't have always all male panel. We did have a woman in the last panel. I wish we had a woman, and also one HR person, because when you talk about transformation, HR plays a very critical role. That said, let's kick off. What do the actuaries do? In fact, before we had a trial run at 11 a.m. just to test the technology, and I asked all my panelists that what do I say if the insurance entity is a human body, then which part of you are you a lung? Because COVID time, everybody's talking about lung. Are you the heart? What are you? One gentleman said, we are the brain. We actually run the show, insurance. Even at the cost of risking the ego of hurting the ego of the CEOs, Jimmer said that. And other person did say that we are actually a backbone. We are actually a backbone on which we are dependent. So actuaries are, if I want to de-technicalize simple term, there are problem solvers and strategic thinkers. Most of them are math wizards. They use their math skills to help the balance sheet, building the balance sheet on both sides, both the assets and liabilities, and of course the valuation and managing risk. They use these skills to predict the financial impact of various events on business and their clients. I think I have made it fairly simple. I don't know how our panelists would look at it. And now, why you are discussing this? We are discussing the digital shift. Essentially, everybody is, we are in the digital world, sorry, my screen is creating some issue. That's why I'm getting distracted. So we are in the digital world, and typically we are talking about how banking is changing and how insurance is changing. And most of the time we talk it from the customer's point of view, and of course from the institutional point of view also, how they're changing and bringing down the cost and speed and so on and so forth. India is the most happening place, and particularly when it comes to the payment system. But overall, I think our financial system is embracing digitization with open arms. In fact, I heard Mr. Nandan Nilekani saying at some forum that what would have been done in years, now it's happening in weeks' time. So that's the case, and insurance is no exception. Actuarial teams around the world, we are doing a little study and saying that they spend anywhere between 40 and 80% of their time working only on data, sourcing data, reconciling them, fixing error, and if I may say so, manipulating also, or using the data right way to fit their models. Now, once we embrace digitalization full scale, the workload will be very different. Will come down for the actuaries, and they will actually, they can spend more time in analyzing the data instead of collecting. So that's one part. And we are, I will not say much because you have come to hear our panelists. My job is only Sutradhar after setting the context, and that's what I'm going to do. So this digital transformation, we understand that it's a deep rethinking as far as the insurance sector is concerned. Technology is available to automate claims, claims and payouts and everything, loss surveys and all. So next 1 hour, 15 minutes, we will see how this transformation, how this Indian insurance segment is embracing that, and this four gentlemen and an expert, how do they see things are changing, and once you digitize and the actuaries spend more time not collecting data and sourcing data, but analyzing data, and that will greatly help them for risk management, for pricing, for their rate making abilities, etc., etc. So the AI and machine learning is not only for banking, even for insurance segment also. So if they indeed adopt a robust data crunching system through automation, actuaries can change the way, be them the backbone or the brain. That's a matter of discussion and debate, but they can change the way the insurance companies work, both for their customers and for themselves. So here I end, and here are the rules of the game. We will not have any long monologue. We'll just have a few rounds, probably 3 to 4 rounds, and we'll talk about how things are changing. So, gentlemen, let's start. We'll start with Prasoon, who is from ICICI Lombard. Prasoon, tell us that. I mean, this. What does it look like for the industry? This entire digital transformation. Tell us also what are the steps you are taking to improve it, and your how his colleagues are reacting, and the overall industry scenario.
Correct. Thank you so much, Tamal. And I think you have set the context very well. So, there are stages of an actual estimation process, right from, as you said, right from data extraction to, data cleansing, then massaging, then, pre-modeling diagnostics, then model selection, then model validation, and finally the model refinement and the final output. Now, if you look at carefully, I think you will see that there are, in the initial stages of this estimation process, you will see a lot more repetitive tasks. And towards the end of these stages, I think you'll see a lot more, human interventions, judgments, opinions coming from the actuaries. The reason being, why the human element is here in towards the end of these stages is because, there are a lot of insights, a lot of trends, a lot of anecdotal information which are never reflected in data. And hence that human judgments comes in the later stage. Now, the whole point is once, we have started automating these repetitive tasks, of course, and that is freeing up a lot of time from, our regular actual activity. And now we are able to focus more on those, granular insights and creating those, valuable recommendations to the management, and lot more granularity and lot more accuracy. So that is really changing our role and is going to change our role beyond our, actual stewardship role. I think we see ourselves more as a strategic, as a strategic counselor than the normal stewardship role going forward. And that's because, we will be able to spend a lot of time, free up a lot of time from our repetitive task. Now, at the same time, the skill set also has to change, because now the repetitive task, getting automated, I think the learnings will change, the learning development will change, and hence, our entire ecosystem of, the actual skill development also needs to change. I think to that extent, if you look at the industry has caught up well vis-a-vis the other industries who have gone far behind and far ahead in terms of some of the implementation of the complex algorithms, the deep learning and the machine learning. But industry has caught up really well in terms of automation. There are a lot more other automation also which is going on within the actual space, because some of the opinion judgments that we rely on for creating those assumptions also need to be automated. So those things are also happening. So it's I think and if you look at my organization, I think to a large extent we also started automating some of the model selection refinement process, also using simple machine learning algorithms like GBM, gradient boosting methods. So I think the industry is in the right direction, I think, but yes, definitely it's going to change the way the actuaries have been working so far, and I see more as a strategic counselor than the the normal stewardship board. Yeah.
Thanks, Prashul. I think the key thing, what you said, that which I also emphasize in my preliminary remarks, is this: your time is now getting freed because of automation, and that actually helping you to look at things in a different way. Of course, one little thing that I picked up from you is I have not heard of this, the data massaging. I didn't know about that. That you also need to do data massage. Good one. So good one, Prashul. Massure. Well, let's hear Anurag Rastogi again. Beyond much, he does his actuarial work, being the chief actuary, as well as here the chief underwriting officers, HDFC Argo. Yes.
Thank
Anurag,
you.
over to you.
Thank you very much. Thank you very much, Tamal. And I think Prashun has brought some very, very important points to the fore. But when I look at what an actuary does in an insurance organization, an actuary is essentially a crystal gazer. He's crystal gazing and he's trying to predict the outcomes of several things at a time. And you look at the end of the day, in a business, you're trying to predict the customer behavior, consumer behavior. You talk about retail businesses, they want to predict what will the customer buy, when will the customer buy, how much will the customer buy. When we as actuaries are looking at the same customer, we are trying to predict, will he make an accident? How many times will he make an accident? When possibly he will make an accident? And what could be my total outgo in that accident? So that's from a customer perspective. When you're talking about, reserve calculation or liability estimation, then again, you're trying to estimate the behavior of the claims. So you're trying to predict and, crystal gaze as to how your claims could develop over a future period of time, so that you provide enough liabilities, enough reserves in your balance sheet, whereby you are able to pay the claims. And so the whole science is about using predictive power of mathematics, financial management, the business knowledge, the economics, whatever you know about it, you try to put that all together into your actuarial model, and you try to predict how these things are likely to behave into future, which could have financial ramification for an insurance organization, and of course for the customer who we all serve. If you go back to 70s, Tamal, some of these models used to be prepared on paper, and then came Excel, and all these multivariate regression will be done in Excel or Lotus Notes, as they call it, which will take a large amount of time, and your model will use very, very few parameters. Then came some of the actuarial tools which are significantly faster. And I'm talking about the turn of the century, when you had some of the tools. I'll not take those names, but they were, pricing and reserving tools which you could use. And that is where the automation began. And, churning these models became relatively faster. And when I'm saying relatively faster, I'm still talking about a multivariate regression model taking you somewhere around a month or two, or maybe longer, depending upon what is the complexity of model, or how many factors you're using. Come now, the prediction of a consumer behavior has become so difficult. There are so many parameters which are driving his behavior, so many explanatory variables that are driving his behavior, and you want to put all those things into your model so that you can predict more and more accurate. Those models are actually failing and you're not able to do a good job. And that is where the AI and ML comes in. You do not have the patience to wait for a month or 2 months to see the results of a model. You want the model to be learning on a regular daily basis or a weekly basis, and you want to use AI. And so, I mean, you look at any, any kind of actuarial work that we do, technology is coming in it into a big way because the kind of data that we are consuming today versus what we used to consume a decade or 2 decades back, there's a massive, jump in the quantity of data, and that quantity of data cannot be churned using traditional tools and traditional techniques. You need very, very advanced digital and technological machines to be able to churn that data. And of course, you need to, plug in the business knowledge, a lot of other factors which are not explained by data to be able to predict accurately into the future. The businesses are getting complex, consumer behaviors are getting complex, and so is our actuarial models. And you need technology and digitization to be able to do your job properly.
Okay, thanks. You said everything that I wanted you to say. I mean, essentially what you're saying that from Excel sheet to automation, it's not today, it had already been done, but the kind of results it have been yielding is it's not happening. So you need a greater emphasis on, again, AI and machine learning and so on. So yeah, these are all new dimensions we are hearing. ICICI Lombard first said that, look, it's all fine, but at the end of the day, you need human intelligence to shift through the data and come to a conclusion. And of course, data is helping. And Anurag said, giving a little bit of history to it. So now let's hear who do we, Gaurav, Bajaj Alliance. Let's hear Gaurav. Again, your preliminary works, preliminary words, how does the transformation is happening, and all around you in your organization as well as in the industry.
Thanks, Naman. And yeah, good afternoon, everyone. So let's start the journey. Like earlier, what used to we see was a tariff regime. So the pricing was governed by the regulator. So the only information that the companies need to store was the price at which a policy was sold, along with a couple of other parameters. If we talk about motor insurance, like the cubic capacity of the vehicle and the location. So basis this, the price was governed. So very limited information that was required when we used to talk about the tariff regime. Also, if we talk about the claim side of it, the information that we required was what is the paid claim amount for which it was paid, and I mean if there were any reserves kept for it. So a couple of fields that were sufficient to pay the claim. Now, if we look at it few years forward, so what happened was our pricing became complex. So instead of just couple of factors, we looked at all the attributes of an asset. So we went with the age of the vehicle, the model, the NCB, and all those factors came into the picture. As well, we started using the customer-based factors as well. So things started getting complicated. So instead of just capturing few variables, we are not now talking about hundreds of variables being captured, and we are now trying to get a right pricing out of it. So that's the scope, how the digitization has increased the work for actuaries. We've definitely got faster from the earlier ages. So the work, the processing speed, we're using the latest technologies, so the work gets done faster. But compared to MBs of data, we are now using hundreds of thousands of GBs of data to get the right result. Similarly, on the claim side, if we talk, now it's not just limited to what payment we've done. We also need to know what time this accident happened, what were the exact geo coordinates where it happened, what was the speed of the vehicle which was driven, what was, can we recreate the video of the accident which happened? So all those things are required for us to assess that going forward, what should be the right pricing for the right set of customers. So all that then gets into our pricing models. So that's where so we're talking about lots and lots of data and increasingly highly complex models we are talking.
Thanks, Gaurav. I think I heard that about the wristband that you put for the health insurance to check my habits, whether I do walk long or do I do go to gym, etc. But you said that even we may be. I mean, I don't know whether it's happening and how fast. We'll discuss in India that you recreate a scene of accident to clear a claim settlement for a motor insurance accident. Great to hear that. So let's hear Deepak. Let's bring Deepak into it. Deepak, you are a CTO, not an actuary, but tell us you are seeing from the other side, and I'm sure your division and the actuarial division in this, they need to work in close coordination. So how are you seeing the changes, and what are you doing or not able to do?
So thanks, Tamal. I would take cues from what my colleagues here have spoken. And let me put it this way. Anurag mentioned that, it's like actuarial's job is to crystal gaze. That means the crystal, if I look at it, has to have the right clarity. It has to have the right cut and the carrot. Gaurav mentioned about the amount of data, the storage. I think the size of the data in that crystal is something that is one parameter. Second parameter is the data integrity, which defines the clarity of the data which is there in the crystal. Third one is the, a person mentioned about data massaging, and how can we reduce that massaging to ensure that you get the right cuts and the granularity that you need. And I think from a technology perspective, it is a two-pronged job. One is to get that crystal in the right place, in the right format, in completeness. And the second one is to empower the business team, the actuarial team, to have the right tools and techniques so that they are they can go and play their game without having any kind of a technological impediments or impairments, something holding them back. They need to be completely empowered in doing what they have to do and what is their core function. So technology needs to be an enabler. It needs to keep evolving and bringing the right amount of data from all different sources, internal as well as external. That's I think, summarizing the need from tech for serving the actuarial function.
Okay, Deepak. So technology is an enabler, and so you need to play that role. So we'll get into all the details later. Well, last but not the least, Sharad, sitting in Singapore, I don't know how many markets you do help in understanding this and helping people doing it. Not helping in the sense, not a philanthropy. That's your business. But just tell us, give us a sense on what's happening in the digital world, how the actuarial functions are changing.
Thanks, Kamal. So I think, what a lot of other people have said is pretty much what is the kind of scene in most of at least Asia Pacific countries, with this whole digitization that's happened and with the de-tarification and so on. There's a lot more workload for actuaries. A lot of teams we come across, they still have the same number of people, and they're still trying to do so much more. And this is, I think a common theme across most of the clients we come across. And like we discussed, technology is the enabler. So if we can use technology to automate some parts of that process, it just saves so much time for the actuaries. So one of the things you mentioned was like, actuaries end up spending 40 to 80% of their time on data management. This is, you can ask different people this question, but generally the companies who have their processes optimized, automated, and so on, that number will be a lot lesser. And of course, the aim is to get that to as small a number as possible, because you need actuaries who are, these specialized skills to kind of have their judgment calls and to be able to do analysis rather than just the data preparation and massaging. So that's something I think we try to encourage, and that's where we try to bring in the technology which helps to do that. So like for example, like we I think one of the first things that most people are doing nowadays is moving to the cloud. Now, when you have such massive sets of technology, some people are still trying to work with desktop licenses and stuff, but moving to the cloud will suddenly enable you to do things with much greater volume and with a much faster speed. So you're not spending, sometimes people are spending hours, because the data is getting transferred and you're working with something, there's crashing of the computers and stuff like that. The basic things, and solving all of that is I think the first main problem. And once you have that kind of taken care of, like we try our best to get actuaries into our tools where you are clicking and dragging and just creating reports quickly. We realize like a lot of times actuaries are doing these ad hoc reports. So the management asks for some sort of reports to see what, I don't know, results look like, claims monitoring looks like, and these reports are not necessarily standard. And then the actuary goes back and says, okay, I need 2 weeks to prepare this. And that's not okay, right? Because there's so much more that the actuary can be doing. So we try to fix that problem. Like we try to set it up in such a way that your data is available whenever you need it. It's cleaned. It's you don't have to keep managing your data, which will happen by, say, linking your data to like policy admin systems and so on, rather than just downloading the data from different systems like what's happening right now. What we also see is different departments in the insurance company sometimes are managing the same data and making the same adjustments, corrections to the data and so on. We try to fix that. Like these are very these are a matter of governance more than anything else. This is a matter of setting up the culture in the company to manage the data properly.
Okay.
And then with software, there's so much more that can be done. So like if you had paper records, for example, you have software these days which help to capture the data from those paper records to see if there are any incorrections in what people have typed. With the claims processing, for example, claims processing can happen, these robotic processors, you can have these implemented and you can have claims processed within minutes, sometimes the easy ones. We talked about recreating the scenes. You have AI. If you were to implement it, you have AI which could look at photographs of a car accident and say and process what the damage looks like and what the cost of the repair should be. So there are a lot of things that people are implementing, and that's where technology kind of helps to do that.
Okay. Yeah. Thanks, Sharad.
Yeah.
Thanks. Yeah, you have summarized again from an expert's point of view. And in our discussion, repeatedly it has come up that when you talk about that, we just say that data is a new oil for the entire financial system, be it banks, non-banks, and insurance. And along with data, and to use it in the proper way, you need a cultural change. But before we get into other rounds, I would ask three of you, that's Prasoon, Anurag, and Gaurav, because three are the actuaries and all. See, I started saying that between 40 and 80% of your time goes into data, managing data. And Sharad also did say that. So can you tell us, like, is it correct, or each of you can say, and how is it progressively going down? Anurag, roughly,
Yes,
from your point of view?
sure. No, you're right. As of now, a lot of time goes into data, and actually, Prasoon used a very right term, data massaging, and unfortunately, so it does happen to be one of the key ingredients of the work that we do, and you need to do a lot of data massaging and data cleaning.
Anurag, you tell us what percentage of your working hours goes into for this?
Not mine, but yes, the actual teams, I would say that
Yeah.
yes, about anywhere between 60 to 80% of the time would go into managing data, and only 20% or 30% time will go into preparing models, analyzing them, and then helping the strategic decision making on those data points. So yes, to that extent, that is right. Absolutely.
Yeah. Prasun?
Yeah, also, so for me, I think the way I look at it, this proportion changes a lot from task to task. Some tasks will have, say, 80%.
Overall,
Yeah, if you accumulate,
package,
yes, around 60 to 70%, I would say, goes only in data, massaging, and the manipulation.
Okay.
Yeah.
Okay, Gaurav?
Yeah, right, Tamal. So I think for us as well, around 70% of the time goes into data process, because I mean, once the data is right, then only whatever further work we do, the models and all, we build on that, then only they go right. So getting the data right is very important.
Thanks. So three of you. So actually, me and Sharad underestimated. On the lower band was pretty low, 40%. We said 40 to 80, but you are saying 60 to 80%. Okay, so the moment you automate this, you will free up your time. We'll come to that later, but let's hear Deepak, CTO. Deepak, can you tell us when it comes to digitalization, actuary or no actuary? What are the things, what are the changes? If I want to ask you the crystal gaze in a couple of years down the line, where would digitalization take the insurance industry? Like you said that for a motor vehicles claim, probably you would start recreating the accident scene. So tell us, like, what are the other things that's going to happen?
See, if one has to look at a future scenario of how the insurance will pan out to go, we would basically see a lot of bite-sized insurance coming in. There will be a lot of demand on instant settlements. There'll be a lot of demand of, I think insurance will get democratized in a way in terms of having these attachment products, people wanting to insure for a particular, need, and that need could be just a temporary need. So from a onboarding or a product perspective, you will find a change that things will get more and more real time. Even settlement part, it will get more and more real time. So that means the risk underwriting has to get almost instant. Claims adjudication has to get almost instant. Underwriting decision making all has to get almost instant. So it is instant gratification which will come in all functions of the insurance industry, be it onboarding, customer service, claims, or any touch point that the customer wants. And we are looking at the digital. The next generations are completely digital. I mean, today in this pandemic, we are seeing that everything is digital, including kindergarten, kids having online classes. So that is the future customer. So when we look at the completely digital mindset of the customer, companies will have to react to that. That's, I think, I'd like to get into all the functions, within the company.
Thanks, Anurag. Yeah, Anurag. Sorry, thanks, Anurag. You wanted to add something. Yeah, Anurag.
I just wanted to bring in a point that it's not, Tamal, about digitization or anything wrong with our technology systems. Our technology systems, each of our companies have wonderful technology systems which can store data, we can process data, and we can provide data to actuaries in the best way possible. But this data cleaning, data massaging work will continue till the time there are humans entering the data. There are distributors who are providing the data which may or may not be accurate or appropriate or complete the way an insurance company wants, because at the end of the day, it's a commercial activity. And so there are data issues as to what goes into the system. System can only provide what has been entered into the system, nothing more than that. What we are talking about, if we actually have to reduce our time on the digital, on the data massaging, data cleaning, we are talking about an entire ecosystem where the data is not manually underwritten. Imagine a scenario that if I have to insure Tamal, I asked Tamal his Aadhaar number. I know there's a sensitive issue, but let's assume for the time being, I asked Tamal his Aadhaar number, and I can populate entire details about Tamal from the country's social security system. So I don't need to ask any question from Tamal. I just ask his Aadhaar number, any other identity number, whereby I can pull the entire sanitized data about Tamal from the government systems into my system. So I don't have to enter data, and so data will be perfect. Tamal wants to insure his car. I don't ask anything from Tamal. I just ask his registration number. I go to Vahan database or the Ministry of Road Transport database. I pull all the attributes of the vehicle that he's. So I get the address, and then a couple of information I want to ask from you. So I'm saying that 80 to 90% of the information gets pulled automatically from the ecosystem. I can tell you that the time that we spent on data cleaning or data massaging will reduce dramatically till the time human, and you look at the most developed economies also, till the time the humans will continue to punch in data, the distributors will collect the data, you will have this problem, and the actuaries or anybody, it may be actuary, it may be the data warehouse guys, somebody will have to do that dirty job of cleaning the data.
Thanks, Anurag. Actually, that's my second question. You yourself raised it. There are so many moving parts in digital transformation and automation with different data sources. And as you rightly said, that had there been Aadhaar, a single data source, which has not happened, our Supreme Court has not allowed that to happen, etc. It's optional. So I will start with you, Anurag, again, because you are not only the head of actuary, you also head of underwriting. Yeah. Give us briefly, what are the key pain points for actuaries in achieving this? You have hinted at this, but be a little bit specific with examples you can just tell us. In this entire transformation, and because we claim to be aspiring for 5 trillion economy, but we are not a developed market in many areas. When it comes to social security and others, so then you don't have a single point data sources. So in this entire transformation process, what are the key pain points for actuaries in achieving in this migration process? Anurag, I'll starting with you. Yeah.
Sure. Thank you, Tamal. I think if you look at starting from 90s, the whole thing about segmentation of customer base started, and that has now reached a level where 5-6 of us are sitting here. I cannot say that I will give the same price to all 6 of us, or I will treat all 6 of us in the same manner. I want to treat every customer as a segment. I want to create micro segment. If I have 1 crore of customer, I want to create maybe 10 lakh segments out of that, or maybe 20 lakh segments of that. And I say that each of my segment is only 4 or 5 customers, and each of these 4 or 5 customers are very, very different from the other 4 or 5 customers. So these 20 lakh segments in my 1 crore customer base are very, very different from each other. They don't want to receive the same kind of service. They don't want to receive the same price. They don't want to be treated in the same way. Now, to be able to create those segmentation, to be able to meet the, a genuine policyholder need or consumer need, I need data to be able to, I need to understand how Tamal is different from Sharad or how Sharad is different from Deepak. I need a lot more data. Unfortunately, there is no centralized database where we can pull the data and where we can pull the information about the customers, where we can pull the information about the assets that our customers want to insure. We have to depend upon distributors. And the insurance sales is such a difficult process. It continues to be a very strong push product where completing a sale itself is a difficult process. And to say that you ask 20 questions from the customer about his socioeconomic attributes, no, it's not possible. And so the biggest pain point for actuaries is to be able to create those micro segments in the absence of granular data availability, and to depend upon data entry operators, and to depend upon distributors, and to depend upon customers to provide us data. That is where we actually struggle, and we don't get the data that we want.
Thanks, Anurag. So yes, same thing again, you are saying that there is no single point source for data. and which you repeated, is that insurance continues to be a push product, not a pull. But I think COVID has changed probably in the past 1.5 years. We are seeing more people on their own, be it life insurance or be it general insurance, they're approaching. If we need to, I don't have the right kind of data, but I'm sure in insurance penetration in the past 1 year has gone up. Anyway, that's a separate issue. Let's Gaurav, let's hear you. Tell us what are the pain points you are watching at this point.
Thanks, Tamal. So yeah, I would totally agree with Anurag. So data remains the biggest pain point. So we've talked about the quality of the data as well. So a lot of issues that we see in the data, how we can automate those things and make data more accurate for us. Then also we talked about different sources of data which are available now. So we have data stored in PDF files, we have data stored in form of images. uh, how do we utilize that data for our actuarial work? So there is a lot of work which is happening around, but I still feel that there's a lot still to be done on that space, and so that we can consume that data and refine our models. Then I think the other pain points which are is once even if we develop one of the best complicated refined model say in the world, how do we take that model live to the end customer? So in between we have various intermediaries, so we have various channels through which we sell our insurance. So are all those intermediaries equipped to use that complicated model and sell insurance using the rates coming from that model? So are they all on the platforms which can consume those rates? Then there are other challenges like if we talk about models which are AI based. So can we have systems which revise my pricing day in day out? So does my regulator allow me to change the pricing day in day out? So we have our filed pricings with the regulator. So we can't deviate from that pricing until unless we go back to the regulator again. So there are challenges with regards to how we can change the approach of our filings with the authority. That flexibility can be built, that whenever there's a price change in our models, that can be told to the regulator and we can immediately go live in the market with those rates.
Yeah, that's a new angle that you have brought in, Gaurav, the regulator. So I'm glad that you have spoken, because there's a question also I'm seeing. We'll discuss it later. Let's hear Prashun, your take.
Yeah, I mean, I'll just give two small example, just continuation to what Anurag had said and Gaurav had said.
Yeah,
say, for
the
example,
pain points.
pain points. Yeah. I'll come to the pain points, but before I'll tell the problem statement. The problem statement today is we are not able to differentiate between the segments, customer segments. Say, for example, in health today, we still have been following, one product, one size fit all, kind of approach for health. But if you look at the other sectors, they have developed that really well, and looking at the cultural diversity and the the lifestyle and the different taste across the country, I think they have been able to come out with different products for different segments. Similarly, look at the motor asset, motor vehicle. If you look at today, if you look at the abroad, if you look at the global economy, they have moved to a rating algorithm where they pick up a lot of factors related to who is driving the car. In our case, in India, we mostly, rate a vehicle based on most of the features are related to the vehicle asset, not the person who is driving the car. Now, the biggest problem statement today for the industry is to how do we, get that differentiation, how do we identify those segments, and for that, I see a big ecosystem challenges in India. For that, I need hundreds of variables coming from, say, garages, from the financial institutions, or say for health, we'll be needing a lot of data from hospitals, pharmacy, diagnostics, and then, create some kind of lake, and then from that I pick up all those variables and use those variables to segment the market pretty well. So that ecosystem in India, I think it's still a long way to go. I think I see serious challenges in that. though it's developing, but it has developed to some extent in silos. But I think now we need a seamless integration so that we match the the level, the standards which are displayed in the the developed economy. So I see those are the biggest pain points at this stage. To move to, say, like Gaurav was mentioning, the deep learning algorithms. See, the biggest value creation of all this automation will only come when you're able to analyze over hundreds of variables using deep learning algorithms. But those variables have to come from somewhere, some sources, which is missing. Whereas, if you look at the global economy, they have moved to that level of integration where seamlessly they get all this information from various multiple sources, which is still, I think, is a way to go in India.
Thanks, Prasun. So essentially what you are saying is this, I'm selling a car to you, Prasun, and you are driving self-driven car. If your blood pressure level is, you don't have any blood pressure, and if you're a cool guy, your premium will be something else, something. But if you are sort of, anger management is a big issue for you, and if you're high blood pressure, then your your premium will be much higher, right? So let's hear Sharad. Sharad, tell us, in the APEC countries where you handle, how are they managing the pain point? Does every country, be it Hong Kong, Singapore, Malaysia, or with the countries that you oversee you closely from Singapore, you have a single data point, or how does it work? What are the pain points there?
So I think this problem is common. There is no clear answer for most people. You can solve parts of the issue. So, like, for example, Anurag mentioned around, like, the documents that you have in your storage. So, like, for example, when you go out there and you buy a policy, you will end up giving in your ID and certain kinds of documents relating to the car and so on. So a lot of companies they're using the OCR recognition, which is improved drastically over the years. They're using that to kind of collect the data from there, or even cross-verify the data from those documents just to make sure that everything was entered correctly. There's a lot of, even within the data itself, like, common simple spelling errors and stuff can be easily sorted out with AI and machine learning. So people are experimenting with that. A lot of people around, depending on the volume of data, like, it makes sense to experiment with that. One of the other things that, like, Gaurav mentioned, I think, was around, like, pricing calculation. So I mean, you can't change what the process is with getting approvals from the regulator and stuff like that. But a lot of countries, even without that issue, people were taking, like, months to revisit their pricing, and by the time they kind of analyzed their pricing again, they took a few months, and by that time the competitors have changed their price again. So we're trying to speed up that entire process by, like, linking them all end to end, so that you can see what the competitor prices look like, and you can do your kind of pricing analysis in a much quicker way. That's I think key to making that link happen.
Can you tell us, like, among the markets which are far advanced than others when it comes to data sourcing and managing, and which are laggards?
So I think Australia, Japan tend to be very advanced. Maybe even Korea, Taiwan to an extent. When it comes to kind of data quality, it also depends on the size of the insurance company and how old or new it is. So if it's an older insurance company, even in an advanced country, they tend to have a lot more legacy systems. They tend not to adopt technology very quickly, because to get that done, they're not nimble enough, because they're much larger generally. Versus, you have a brand new small little insurance company, even in a small country, coming in with all sorts of technology and so on. They can do it much faster. Okay. So you have different people in different countries at different stages.
Okay, thanks. So in our the four gentlemen who are representing the industry today at our function, they don't have any legacy issue. You're all the organization of this decade after India opened up. So let me ask you bluntly is, tell us about your own organization. Where are you? I mean, I'm not asking for any classified information, but when it comes to automation and making the actuarial, freeing up the actuaries from data crunching to actually strategizing, how your organization is changing If you can give us some examples to the extent possible. I'm not forcing you to say something classified information, but this. We'll start with Gaurav. Yeah.
Yeah. Thanks, Tamal. So essentially, the few things which I can talk about my organization is working on. First is, I mean, even though you said we are only like 20-year-old organization, but still like the systems which we started with are like, they are no longer, like I should say, able to handle the load, or they were not built with that robustness in them. So we are in process of moving to the latest technologies for our policy admin system. So that's getting updated. Then as well, there are a lot of digital initiatives which are running through the organization. So if we talk about the basic of policy issuance, so a lot of policy issuance used to happen manually. Now there's a clear focus that as much as possible, that process should be digitized. Policies should be issued online through the system. What it makes for us is a better quality of data as compared to a manual process. So that's getting done. If we talk about the claims process, so again, a lot of surveyor used to go, settlement used to happen via the surveyor. If we talk about, say, for example, crop insurance now, so that's being done using the drone technology now. Also, if we talk about motor claims, it's settled via the photogrammetry now. So there's a lot of digitization push which has happened on the claim side as well.
Okay. Yes. Anything you want to add?
No, similarly, I mean,
Gaurav?
it goes to, yeah, it goes to the HR initiatives. So the way the employees were looked at, so it was all manual driven. Now the HR processes are AI driven. So what sort of training should be given to the employees? So that's now
Okay.
basis the technology.
Yeah. Thanks, Anurag. In your organization.
Yeah, and I also, fully agree with Gaurav that, it's not that we don't have legacy problem, because what was a good system and at the turn of the century is a completely outdated system today. So we also have a legacy problem. Of course, the magnitude of that problem may be much smaller as compared to some of the older companies. In terms of the digitization, I think we would be in the top 3-4 companies. When we talk about digitization, I can tell you that about 95% of our policies are absolutely human intervention free. They're completely automated. The data comes in directly through the customer and the policy goes out. There's absolutely no manual intervention. The entire claims process is completely digitized. There's absolutely zero paper movement. And I heard Sharad about OCR. Yes, of course, those technologies are being used. And so the claims can be processed. And right now it's COVID. The regulator is pushing on faster settlement. We have been for the last 2 years settling all the cashless claims within 20 minutes. Almost 99% of our claims are settled within 20 minutes from the time the data comes in. And it is possible only because of the level of digitization. So if you talk about the level of digitization within the country, I think we are right on the top, within the top few companies. Are we there where we want to be? No. So there's a lot that we want to do. There are challenges, but I think we are working towards that so that we can be very, very fast, we can be nimble, and we can be, as digitally advanced as the Amazons of the world.
Thanks, Anurag. I mean, it sounds like a political speech. Yes, so balanced, so diplomatic, so balanced and so diplomatic. We are doing pretty well, but we are not there where we want to be. But you are absolutely sure that we would be there. So it's great to hear that. Yeah, Prashun, your turn. Tell us.
Yeah, just a few statistics. I mean, I think I completely agree with what Anurag and Gaurav had said. Similar statistic. 97% of our policies are electronically issued. Without any intervention.
That is now. Sorry. I'm just interrupting, person. For my understanding, for our understanding, that is today because of COVID. What it was, say, 1 year before. Had we been talking this in February 2020, what would be the percentage? Then we'll get a sense.
Correct. So, for example, suppose, the motor claims assessment, if I take, so around right now, it is around 60% of the claims are assessed with AI. It was just half pre-COVID.
Okay.
It was just half.
Okay.
So there was definitely a shift because of the COVID-led situation. So, similarly, we have like straight through process underwriting using AI, like breaking cases in motor, cashless authorization, like, Nanurag had said. So these are all done using AI, and some of them like, motor damage assessment using deep learning models as well. But I'll give few things, what we are doing in the actual department. For example, the biggest problem statement today is to predict the number of losses which will happen in a lockdown, because, we were very difficult finding this very complex to predict the number of accidents which might happen in a lockdown, because the lockdown will reduce the traffic movement, hence the number of accidents are expected to reduce significantly. How do you predict that? So what we have recently started doing is, overlaying the mobility data of Google or even say Apple, say traffic movement data or driving movement data, or say movement around the residential areas on top of our whatever claims have been reported, historically. And we were able to clearly see some correlation. We're building a time series model, and the amount of the explanation or the R square we got is significant, and that was amazing. So these are some of the new things we're doing, coming out with new innovative ways of predicting the number of losses in a very peculiar one-off kind of situation like COVID. The other things also, as I said, there are middle stages of those actual estimation process. There also we are trying to automate as much as possible using simple machine learning techniques, like GBM, and also some of the reports we keep on getting from various sources, various functions for creating those opinion and judgment. So those are also we are trying to automate. So that itself gives a huge boost to our entire process. Yeah.
Thanks, Prashant. Actually, each of you bringing in newer things. It's good. It makes it interesting. So here, Deepak, as a CTO, where do you see in your organization, what are the things that you have already achieved what you want to, or there's some way to go? Can you give us a sense, like in the as Prashant was saying, in percentage term, it's a big leap over the last 1.5 year. Whatever you want to say, Deepak.
So Tamal, I think on be it the new business or the claims, the numbers would be fairly similar for the top 5 companies at least. I would touch base on the data side of it. What we have done is we have created a single version of the truth being the target. We have created a data lake. On top of that, we have created premium register, claims register, and other registers, which act like the single source for all analytics. And, that is the one source sanctified where you can go to get your version of the data. Second thing we did is recently we have also set up a data office, which will be responsible for the entire data governance, data quality, data definition, and the metadata management. So these are the key areas where you have data related challenges. The third one is the setup of fully functional and independent data science function within the organization, which is responsible for looking at key areas of insights and building those algorithms on the AI and ML models specific to different business units, be it underwriting, be it risk assessment, or even claims. Plus working on computer vision for various use cases that our fellow panelists here touched based upon, whether it is to do an OCR, to read unstructured data. So one is saying we have a set of data. Yes, it may be limited. So we kind of put it into 2 categories. One is what is financial and core, which needs to be 100% accurate. And the other one is like risk, details and things like that, which will help the actuaries and other underwriters as well as our product teams to do a data analysis, to get insights. Bringing all this together along with governance around it has been a core focus for us by setting up actual functions with responsibilities to handle these. So that's on the data side. I think beyond that, we have worked on the entire piece that the colleagues have already spoken of.
Okay, thanks, Sharad. You tell us in the rest of the APEC, other countries and all, you are seeing the problem of legacy issues and how are they overcoming and all. So, is there any lessons our insurance sector can learn from there? Any good practices, best global practices, how to overcome the legacy issues, how to embrace this entire data automation that's in the fastest possible and the most accurate way? Is there any thoughts you have?
So I think I touched upon it a little bit earlier, and I think what Deepak mentioned is exactly what I think the better companies are doing. So essentially, the biggest problem is around, like, there being different sources of data and different parts of the company using different sets of data. And then, when the reports go up to a management, they're like, actuaries came up with a certain report, and then finance people came up with a certain report, and these don't necessarily match well enough. And then, people are trying to figure out what the problems are, and each person is kind of duplicating that problem. So that data lake is one of the first things that people work on. If you have legacy systems, if you are kind of moving on to a new system, it needs to be a company-wide effort where people are kind of going in together and thinking about what their new system needs to look like. And you need to think many years in advance, because, like these the other people mentioned, Anurag, Gaurav, and Prasun mentioned, like, they set up their companies, like, to say 20 years ago when the companies were set up, they set up their systems thinking this is the best way to kind of manage things. But as the data evolves, it definitely starts breaking apart, and then you kind of need to start thinking about new software and so on. And the biggest problem that most companies are facing is you have different systems at different levels of evolution. So you have some really old systems, some slightly new systems, and they cannot really work well with each other. So you need to have, like, open source systems, APIs, all linking to each other. You need to really think over that entire process and link everything together.
Mm-hmm. Yeah. Thanks, Sharad. We have almost completed 1 hour, but we have many questions coming up. My colleague Sachin Mampata is forwarding. But before that, let me quickly have one small thing. Be very brief, all of you, and we will not take all the questions. Maybe one or two. Tell us, like banks also, the insurance segments, and you actuaries, whether I call you brain or heart or the backbone, you need to keep two things in mind doing things. One is you need to be profitable, in the sense the investors, keeping the investors happy, whether you are already listed or going to be listed at the various stages, most insurance companies. So the one constituency is the investors, and other constituency is the customers. So both keeping the customers happy and investors happy, right? So which means you need to be profitable, and at the same, in some way, these are two interconnected. But then there are two different constituencies, and this is the balancing act you need to do. How do you do it? Let's start with Prasun. Is it too daunting a task, or you are on course doing this in this new world where data is the oil? And all of you said that it's all about robotics and data. It's AI and machine learning, and things are changing. You need to spend lesser time data crunching and more on strategizing. So you need to look at on your left the bank balance sheet, your company's balance sheet, which means the investors, keeping them happy. On your right is the customers, the faster claim settlement and getting more customers. So in this balancing act, maybe 1.5 minutes each, starting with Prasun.
Absolutely, I think this is the right forum with the right topic to discuss this, because see, actuaries cannot be looked at isolatedly only for balance sheet protection. Of course, they should be looked at, relied upon or for the balance sheet protection. But at the same time, I think the other role is to, be a strategic counselor and, facilitate all those decision-making processes, all these decision-making across the organization. I think so there, all this automation and digital shift, I think what will happen is only help the actuaries to fine tune this balance a much more, constructively. For example, because of this automation now, what we are able to do is to, convert our, projections or the output into more actionables, and deliver to the functions to implement them so that we are able to achieve that balance. So neither we are losing business opportunities, but at the same time we're ensuring that the profitability and the balance sheet does not get compromised. That is exactly.
Okay, thanks. Gaurav, your take. Gaurav, you are on mute.
I'm sorry.
Yeah,
So Tamal,
sorry.
absolutely right. So I think the philosophy which we follow is right price for the right customer. So that's about actuarial. I mean, if we can get our pricing right to the right set of segments, so we'll achieve both. The customers would be happy because we are charging them right. So if there's an unhealthy customer, I mean, he won't mind paying something extra for his diseases. Similarly, I mean, if there's a very healthy customer, I mean, he would want a discount in his pricing. So if we can get that balance right, we'll make the customers happy and the investors happy as well.
Well, Anurag?
Yes, thank you, Tamal. Tamal, I don't see a conflict in these two apparently conflicting objectives. And so stakeholders, so the shareholders and consumers, these are not the two only. I would add two more stakeholders, very, very important stakeholders, and that are government and the regulator. All these four are very, very important stakeholders for an insurance organization. And this is the core of actuarial code, that we need to make sure that every single thing that actuaries do, we are able to maintain a balance in the interest of all these four stakeholders. Now, why I don't see a conflict? I mean, look at the hospitals or the doctors make money by serving the customers. If they have to make money, does not mean that they will make money at the cost of their patients or the customers. Similarly, here we are providing a service, and we cannot provide a service unless there is some profit element for us. What is important is that whether that profit element is a reasonable profit element or it is usurious profit. So obviously, in such a competitive environment, you cannot make usurious profit. Actually, insurance companies are struggling to make that small profit that they need to be able to keep investors interested. So I don't see a conflict. It is quite possible to offer excellent services to the customer, price them right, and make a small profit which can satisfy and which can attract more and more investors into this market.
Thanks, Anurag. Very well said. Let's hear Deepak. And you are not an actuary, but from a CTO's point of view, tell us, how do you balance the two?
There is always a balancing act, I think, Tamal. I would stay away from that profitability question. I'll simply bring it a very simple example. How much information should you capture in the front end? While on one side, there is a team which demands more and more data to be captured, and on the other side, there is a team which says that there has to be ease of use. You have to do a transaction with minimum interaction or minimum data entered. So when you have these, how do you balance this? Similar problems exist, similar challenges, I would say, exist of balancing everywhere, right? So whether it is about scaling the business growth versus the quality of the book that you write, you have the process and technology to balance these. I think that's a very fine balance that you are trying to achieve, and I think all of us are on a daily basis trying to do that as well.
Okay, Sharad, the last word is yours. Then we'll take. There are many questions, but we'll take only two for the time's sake. I said by 5:15 we should close. So, yeah, Sharad, any piece of advice, suggestions for the Indian market, the players here?
So from my experience, I think most of this is a common problem for most of Asia Pacific. Most of the markets are super competitive. So what most customers have realized that, fighting on premium is not the way to kind of get things right. Like, differentiation is one of the key things which a couple of people mentioned. And then I think most of the technology is being focused on making the customer experience much greater. So like, when they are going in and buying a policy, the policy should be seamless. Like, you should be able to buy it quickly with least amount of questions and least amount of kind of steps involved. Similarly, when you're asking for a claim, like, you should get your claims paid within seconds, minutes, depending on how you want to set that up. And the companies are using those kind of features to demand a premium in their kind of prices. So then they don't have to compete with the other insurance companies because they have a better brand. That's what most people are trying to build. I think that's where it's kind of going in. One of the things I wanted to mention was, like, one of the things that's unique and that's probably not happening as much in India is some countries, like, like Australia, for example, has a lot of AI and machine learning involved. They look at renewal customers. When a customer is renewing, they can analyze the customer's behavior and understand how likely they are to kind of stay with the company. And they are able to kind of tweak the premiums a little bit just to get a little bit more out of that customer to improve their profitability. Now, that's not something necessarily happening in most markets because there's a lot of restrictions from the regulator on how that happens. But that's an important one that people are doing.
Okay. Thanks, Sharad. We have many questions. I'm only picking up two because most of the questions are being answered. My colleague in Business Standard, Sachin Mampata, has been painstakingly over I think out of 5 on 4 events, he was in charge of collating all the questions. So I'm just picking up 2 questions. One question is including Sharad. If you guys are not comfortable answering, Sharad also can answer. And the second question is primarily for all of you. Any of you can answer, or more of you. Just have very quickly. First question is this: where does the regulator come in this transformation? What do you expect from the regulator? I know it's a sensitive issue, so any one of you want to answer this? What is your expectation from the regulator? Prashun, Gaurav, Anurag, anybody?
I think,
Anurag.
I'll start. I'll just give a small overview. I think regulators will have a big role to play. I think, definitely in every step, how they ask, what they ask, at what granularity they ask, what product innovation they seek from the industry, what level of differentiation, risk segmentation they, expect from the industry, what level of oversight, what level of supervisory, review they expect from the actuaries and from the management. I think all these will lead to, nudge the industry to move towards automation. Moreover, there are certain frameworks, I think they are in the process of bringing to the, industry, for example, RBC, economic capital, as well as, Solvency II. I think there will be natural push to the industry to, or nudge to the industry to move towards automation. Otherwise, the level of detailing which is required in these frameworks, I don't think it will be possible without automation. That's a small
Anurag, also Deepak, I come to you. Anurag?
Yes.
Make it very short. Yeah.
I think the regulator has 2 very, very important roles. One is to make sure that the consumer interest is protected. And the second interest is to make sure that the companies remain solvent and, financially able to pay the claims of their customers that we write. So I don't think automation or digitization comes anywhere in between. And I don't see anywhere where the regulator comes in the way of digitization of the companies. All the companies, whatever we are talking, we have come a long way in terms of digitization. In the recent past, actually, regulators have been at the forefront trying to make sure that the claims are settled as fast as possible. Now, they will only say settle claims fast. Whether you do it manually or you do it digitally, it's up to you. But that kind of speed cannot come if you are in the manual processes. So, of late, if you last 1 year, if you see, the regulator has really allowed that you don't need to send physical policies. You can send the policies through electronic mediums. So, I think now, is regulator doing enough? I mean, you might call it a political statement, but of course they can do more. But I don't think that regulators are
well, Anurag, I think we lost him for some technical reason. Deepak, you wanted to add?
Yeah, I think the regulator, one of the ways great thing that the regulator did, and we appreciate, was the sandbox approval for a lot of products which were in the innovative space. And regulator, while has the the responsibility to protect the industry and the customer's interest and to keep everybody honest, has also been playing a role of insurance penetration, as well as ensuring that the level of service kind of keeps stepping up. And I think that continuing will help the industry a lot.
Okay. Sharad, do you want to add anything, Sharad? If you wish to, otherwise I'll not force you.
I'll do a quick entry. So
two-liners. Yeah.
Yeah. So I'm not.
Sharad, why don't you answer this? I'm adding one question. Is this, how do you explain, because they may feel inconvenience, how do you explain the valuations enjoyed by new insurers, the digital insurance startups specializing in in the, like Echo they are talking about? It's recently valued at $500 million. So how do you Sharad, you want to talk on that?
Can you say the question again?
I said, how do you explain the valuations enjoyed by the new generation insurers, the digital insurance startups?
That's a difficult question. I think.
Acha, anybody there? Any one of you want to answer? Yeah, Gaurav. Yeah, Gaurav, you did not answer. Okay, Gaurav, quickly.
I think as a company, there's nothing to be jealous about or sad about. We would be more than happy seeing the valuation that Echo has got. I mean, it just emphasizes the fact that we as a company also needs to work on our digital assets. We can't continue with our legacy systems and say that our valuation would remain whatever it is, and we'll say that the newer age companies won't be able to overtake us. So I think we need to keep that clarity of thoughts in our mind, that we need to constantly endeavor and as fast as we can towards digitization and achieve much more valuation than companies like Echo.
Okay. Question you want to add?
Yeah,
one sentence.
One sentence. Yeah. So I think the investors have been putting a lot of premium on the number of digital customers getting onboarded.
Exactly.
That is just one point I just wanted.
Exactly. The last question I want each of you to answer, not Sharad, of course, because Sharad can't answer. All four of you can answer. It's a very interesting question. It says that we have been talking and hearing and doing 10-second loans for a decade now while banking. When do we see, if not a 10-second, 10-minute claim settlement by insurance companies? Anurag?
It's already happening. It's already happening.
10-second claim?
Yeah, it's already. So it may be 10 seconds, it may be 30 seconds, but it's already happening. And there are, in health claim, there are situations where some certain types of claims, the claim comes in and the settlement goes out. You have somebody who is a kidney patient, and you know that he is with you. He goes for a treatment. You don't have to check anything. You know the policy. You put some terms and conditions in your system. The claim comes in and settlement goes out. You have the travel claims, and you tie up. The moment the flight is delayed, the claim comes in. And the customer does not even have to lodge a claim. The moment you come to know the flight is delayed and you want to pay, a $50 or $100 claim to him, your system automatically recognizes the flight is late, and you trigger an email that the claim of so and so has been settled. Please send me your NEFT details and we paid it. So there are scenarios where this is possible, this is happening. But so when you talk about those 10 seconds loans, not all loans happen in 10 seconds. So there are certain scenarios in which that can happen. In certain scenarios, even insurance claims are being settled. Okay. There's a need to widen the scope of that.
Okay. Deepak, want to say something? Is happening?
I agree with Anurag saying that it is case-to-case basis. There are some policies where it is feasible. There are some policies where we do not want to do a 10-second claim. Travel, for example, you can do it. Small ticket items, you can definitely do it.
No, Deepak, it's not, you can do it. You are doing it?
I think there is some time right now to get the entire algorithm in place. So we may not be there, might be close.
Gaurav?
Yeah, so we do have on-the-spot settlement. So basically, if your vehicle meets with an accident, you just click the pictures of that vehicle and you just send a request and you immediately get a quote from our side for the settlement of the claim. So that's very quick. I mean, not just the retail lines, motor and health, we are even working on the commercial lines like property claims and all, how we can work to settle those quicker. So normally they take days to settle, how we can settle them in hours. So that's the endeavor where the company is working on.
Prasun, last word is yours.
Yeah, it's already happening, and it's a small value claims, and which is easily done by some inspection app. You take the video and upload the pictures and done. It's happening.
Thanks, glad to know that. But then I don't know why you are probably you are not as smart as bankers, because if you are doing a 10-second claim settlement, it will be a great slogan for advertising, no? To get your, it will not be a push product anymore, it will be a pull product. If you start giving the 10-second claims claim settlement, I'm sure it will be a great hook. But anyway, it's with an interesting note. We come to the end, not only the today's session, which is the digital shift automation for actuaries, but also the five episode business standard SaaS event is de-risking the risk business. Today's key takeaway is what everybody said, that yes, things are changing. The entire ecosystem is changing. They are embracing digitalization. It's probably taking a little more time than it should because of the multiple issues involved. What they said is this: they are often working as silos. Not the entire organization is moving ahead in one direction. All of them agree that they are spending between 60 and 80%. The actuaries are spending between 60 and 80% of their time now, even now, with the data crunching. If as and when the automation is in place, which is not easy, because in a country like India, you don't have one source of data. There are multiple sources. But once this is done, the actuaries will get free time, which they are already doing, but more to add to the strategic thinking. So actually, they are repositioning themselves. They are the change agent of the industry, both for the customers as well as for the balance sheet, for quicker decision making, for making more profits, and for winning more customers. So thank you, gentlemen, Prasun, Deepak, Anurag, Gaurav, and of course, Sharad. Thank you for being with us. Thank you for the audience for this 5-long series. I hope you enjoyed it. And that's all from my side. Stay everybody safe. Thank you, and a very good evening for all of you. Good night for Sharad. Over to you, Manish.
Thank you, Tamal, and thanks to all our panelists for this insightful discussion. I hope the digital shift gives you more data points for relevant and timely action. Moving on with the swan song, as Tamal said, thanks again to the speakers who had been with us through the series. Thank you, SAS, for partnering with us, and to Uptrendic Events for managing the production. And thank you, dear audience. Quite the journey, and we've come to the end of it. That's it from Business Standard Presents De-Risking the Risk Business in association with SAS. Please stay safe and take good care of yourself. Thank you.
Thank you.